Well, if the Federal Reserve was looking for additional data to show the economy's cooling, well, they got it today. So that's what we're going to talk about briefly this afternoon. And also, when's the right time to refinance? How can you refinance? Can you refinance? When is the best time to refinance? So that's what we're going to go over next. So without further ado, let's get over to rates. Rates are down just a hair today. They're going to go down even further. Why? Right through here. So this is the agenda we had for today, the economic calendar. Let me just paint this picture for you. I'll just pull out 4 or 5 of the highlights right through here. So we had jobless claims. Actually, they went up. So we have more people jobless, meaning they lost their jobs. Continued claims, well, they are right in line to where we were. So not a lot of people are going back. It's staying steady there. Corporate profits. Previously was about 4%. It's now negative 1.7. GDP went from 3.4 to 1.3. Okay, this is production in our economy. GDP final readings 3.9 to 1.7. Inventories, because companies aren't selling as much stuff right now. People are finally starting to pull back. Inventories went from a negative 0.4 to a positive 0.2. And then we have pending home sales. It is falling, completely fallen off a cliff. 3.4 previously, positive, negative 7.7 right now. So these numbers are devastating. So what's it doing to the markets? Well, you see the MBSs right now, they're up 32. That means we're going to get a little more reprieve on interest rates over here. So they're going to start coming down. Now, I want to talk to you guys about the question of can you and when you should refinance. But let's take a quick glimpse backwards. The Dow Jones, S&P, NASDAQ are all down. The good news or a little bit of a brighter side, we got oil also down, helping on the inflation front. So let's get over to the how soon can you refinance a mortgage? Okay, so I basically put this slideshow together. It's kind of corny, but it was the best thing I can do with time constraints. Right through here. So let's break down refinancing your mortgage. I'll just caption it as that. How, when, why, and where, and when does it make the most sense? So let's go through here. Refinancing your mortgage can lead to substantial savings over time, but it also could cost you more money because if you keep refinancing, even though the rates are lower, you don't want to keep extending your term to 30 years and then 30 years and 30 years. You'll never pay off the house. So if you're going to refinance, maybe look into keeping the same time frame on your home that you currently have now. That's one just little tidbit. However, various factors, including waiting periods and rules, may be considered when you're looking into this. So let's start going down through. Financing timeframes. On a conforming loan, that's just a normal loan. So if you got, a conforming loan, you might not know, but your lender would know. So maybe you call them and say, do I have a conforming loan or conventional loan or an FHA or a VA loan? So they'll be able to tell you that. So with a conforming loan, there's no waiting period. You can refinance basically right when you walk out the door. So I tell this to a lot of people that are using the builders lenders. I'm like, I know the rate they're giving you is high, but they're still giving you a ton of money for closing costs and things like that. So close with them and then just call me back and I'll refinance you because there is no waiting period. However, if you want to pull out cash, there is a waiting period, and that's for 1 year. Okay, so now let's go to jumbo loans. Same thing. There is no waiting period. Cash out if you want to pull out cash. So there's 2 ways to refinance. You can do what we call a rate and term. That means you're just paying off the current mortgage that you have. So you're refinancing to get a lower rate and maybe a shorter term on that. And then there's what's called cash out, meaning you're looking to pull out cash for any reason. Pay off bills, put in a pool, pay for college tuitions, whatever you want to do. That's called cash out, okay? FHA and VA, usually there's a 210-day waiting period, and USDA, you have to wait 1 year. Okay, so that's the breakdown of the time frame on when you can possibly refinance. Frequency of refinancing, there is no restrictions. You can refinance every month if you'd like. It's going to be hard to do and plus closing costs, but you can refinance as much as you want. I actually refinanced probably about 4 or 5 times between 2018 and 2021 just to capture those low rates as they came due. So that's what I did as well. Let's go through the next thing. Rules for different types of mortgages. So let's break this down real quick. Conforming loans, there's no legal minimum time frame, but some lenders will impose a 6-month time frame. Jumbo loans, no legal requirements, but approval criteria might get a little stickier. Cash out refinance, waiting 6 months to 12 months is normally what's required, and it says 20% equity required. Well, FHA will go up to 85% in cash out. VA will actually go up to 100% and do a cash out. But this one, they're talking about conforming lending. Okay, so now let's go to FHA. FHA loans, 6 months, 6 payments made, good standings, 210-day waiting period. So basically that's saying you have to wait till you make 6 payments and you cannot have missed a mortgage payment, and you can refinance. VA, you have to wait 210 days to do that. And USDA, you have to wait 12 months, but your payment also has to go down $50. So it's kind of redundant from what we have above. Now, here's where it gets a little bit more interesting, I guess. When would you refinance? Okay, let's go through this. I'm going to say if I agree with these or not. Most of these I've agreed on so far, but increase in home value. Consider a cash out for better rates. Consider cash out. I wouldn't do that. I wouldn't refinance just because my house value went up to pull out to get cash. No, I would kind of debunk that one. Convert to a fixed rate. Yeah, that's most likely. We had a lot of people that did fixed rates back when. Some people might be doing adjustable rates now because rates are so high. But if you could actually refinance that rate into a fixed rate, a lot of people do that. Improved credit score. Higher scores may qualify you for better rates. So you have to really focus in on this. Is it worthwhile to do? So how much is your rate going to go down? How much are you going to actually save in dollars before you do this? So I wouldn't just say because I got a better credit score now, I would look to refinance. Maybe kick the tires or reach out to us. And we can say, okay, here's where you're at now, and here's where you would be, and we can work out the financials for you and see if it makes sense. Okay, shorter loan term. Now, this is where a lot of people kind of, I'll say, do it the wrong way. They'll refinance, and then they'll keep chasing that rate down, which I don't blame them. They're saving money. Most people save $200-300 a month, but you don't want to keep going back to a 30-year term because you'll just keep paying forever on that mortgage. It's up to you. Can you afford that extra payments or not? But I would strongly suggest when you refinance, keep the same term remaining on your loan as you have now. So we can do that for your information. Now, here's the FAQs. Now, a couple of these I read previously, and I'm like, okay, I don't agree with that one, or I'll clarify it for you. So let's get into it. Impact on your credit. It will be a hard inquiry. A lot of people freak out because of that. Did you know when we pull your credit, when a mortgage company pulls your credit, basically the maximum credit score that you could get hit or how much it could drop is 5 points. So 5 points is going to make or break, your ability to get a loan. Please don't even try, because that's you're teetering on the fence on that one. Down payment requirement. Usually 20% equity is needed, not necessary a down payment. I don't understand what they put in here because you can refinance a VA loan up to 100%, actually 100, and I think it's 5%. You can refinance an FHA loan and go all the way up to 102%. And you can refinance a conventional loan in most cases up to like 97%. So you don't need 20% equity in that. So I'm going to have to give that a not really that accurate. Negative sides of refinancing, higher monthly payments for shorter terms. Okay, well, if you shorten the term of your loan, most likely, unless your rate goes way down, you're going to have a little bit higher payment. You might not. If the rates go down substantially enough, you might have the exact same payment on the exact same term you have remaining now. So this can be accurate, it can not be accurate, but if you try to pay off a loan quicker, most cases your payment's going to go a little bit higher. Reduces equity with cash out. Well, obviously, if your house went up in value, now you have that much more equity in it, and you refinance and pull out the cash, well, you pulled out that equity, so you're back to square one again. So I wouldn't really strip out all the equity in your home unless you really have to, because you'd be put into a really bad position if the market does a downturn or you lose a job or something like that. Then you'll be forced to sell that house, and you've basically stripped out all the equity, and you're going to be stuck. Okay, so that's that. And then the last thing is steep closing costs. Now, this is one where, like, I'm in Illinois. For example, if you refinance in Illinois, your title fees are about $875, and you're going to have an appraisal fee for about $500, and there might be a couple $100 in addition to that. So you're probably looking at about $1,500. Okay, most people have a mortgage payment at $1,500 or more. So basically, think of it this way: you're going to use one of your monthly payments to pay for your refinance. Now, here's how mortgages work as well, just so you understand. Let's say, for example, you refinance and you're closing in the beginning of May. Okay, so what will happen is we're going to pay off your current mortgage at the beginning of May. So you won't have a mortgage payment, your old mortgage company or your new mortgage company in May. Okay, you also won't have one in June, because the companies have to wait at least 30 days before your first payment's due, and then they push it to the first of the month. So if you close the beginning of June, you won't have a payment in June. You won't have a payment in July. You'll be due August 1st. So that's how that works. And then the conclusion, refinance can be a strategic financial move. It can be if you do it right and you don't overspend and you don't strip out all the equity in your home and you don't keep going back to a 30-year term. It makes complete sense to do so. And that's about it for that, folks. So I hope you understand how refinancing works. If you think it might be beneficial for you, not sure it's the perfect timing, but eventually it will. How do you reach out to us for some help? We'll go to therateupdate.com. Here's our website. You can click apply now right up through there and you're on your way. So thanks so much for watching, guys. God bless. Have a fantastic day. If you got any questions, let me know down below in the descriptions because I check that. You can also reach out to me or my staff right through here. Our 800 numbers right there. And you can reach me via email right through here. And yes, it is me that's answering. So thanks so much for watching, guys. God bless. And if you haven't subscribed yet, please do so over there. Take care. Have a fantastic day. Bye-bye.